Good afternoon, everybody. I'm Dave Weisberger, CEO of CoinRoutes. It's time for This Week in Crypto. It's Friday, May 26th, and we spent a whole week watching paint dry. Oh, excuse me. Spent a whole week watching the market wait for the debt ceiling impasse to be resolved. And well, we're still waiting, although at this point, the rumors are flying that there will be a deal soon. And to be honest, that's always been the most likely scenario. Would be 79 for 79 in terms of making sure that we can raise the debt ceiling in Congress and the president can get together and agree to spend more money, but maybe not quite as much as the president wanted and not cutting as much as the Republicans wanted. Okay. With that out of the way, assuming that that is what happens and nothing crazy happens, we'll be looking at what goes next, which is the Federal Reserve. So before we go and talk about that, let's talk about the markets. Well, as I said, they were boring. Bitcoin is more or less flat. Ether's up a skosh. The Russell is down a bit. And NASDAQ was up on the back of blowout earnings report, at least, an outlook from NVIDIA, producer of the most important GPU chips out there. And look, the fact is, everyone's eyes are now going to turn to the Federal Reserve. So what's going on there? Well, today, the PCE, the Federal Reserve's favorite gauge of inflation, came out hotter than expected. So now we've gone from a few weeks ago saying there won't be any more rate increases. Now the market is pricing a 70% likelihood of at least one more, if not two more rate increases, and no probability of a rate cut by the end of the year. So markets are flighty. We don't really know. At the same time, my friend Mike McGlone will tell you that all the leading economic indicators are trending negative, that there are real issues in the banking sector. Bank lending is slowing down, but these are all ones that are lagging indicators, or at least they're all leading indicators, and the Fed likes to look at the lagging indicator, which is the inflation rate. So we could be heading for an interesting situation where the Fed hikes one or two more times, crushing risk assets, sending markets lower, and at the same time, the presidential election is starting. That's a very interesting situation. My cynical nature believes that will not happen. I just have a very hard time believing that the Federal Reserve is going to set up the administration for a significant failure. So we'll see what happens as the rest of the year unfolds. But the reality is there's a lot going on the macro side. And I'm not sure we know what's going to be happening because this coming week, we have Memorial Day weekend. And so we'll see what develops over the next week or so. But there were a couple of things that happened in the news this week that are worth talking about. Well, one was in the news and one was in the news to me. Let's talk first about what was in the news. So in the news, we had the first ever use of Twitter Spaces to do a campaign launch, and that was Governor DeSantis of the state of Florida, where we happen to be in nice sunny Miami, announcing he was going to run. Now, there were technical glitches. I got kicked out several times from my cell phone. There were anywhere from 700,000 to 1.1 million, I've heard, trying to be or on the Twitter Spaces for some point in time. But technical glitches notwithstanding, from the crypto point of view, I think a couple of things are very important. The first important thing was that Musk and DeSantis actually talked about Bitcoin and crypto in the form of CBDCs on the announcement and in the conversation. Now, this is kind of groundbreaking. We've gone from the fact years ago to where nobody mentioned crypto. Even when crypto was at $3 trillion, apart from making fun of crypto bros, politicians didn't talk about it. But in the last week, we've had Joe Biden, while licking an ice cream cone, claim that we can't make a deal to help out crypto traders. And now Ron DeSantis specifically talking about the importance of Bitcoin and supporting it for economic freedom. Now, that is a very big step. Along the way, we heard at last week's Bitcoin conference from RFK Jr. talking about economic freedom in Bitcoin as well, proving it should be bipartisan, but for some reason it isn't. Now, we know the reason. The reason is control. And the fact is, the current administration wants to control the economy. They believe they can fine-tune it, kind of like you can fine-tune, well, pretty much anything, an old-fashioned TV set. The reality is governments don't do a very good job when they control economies. So good luck with that. But the fact is they want to control it. And so that's why, for the most part, they're trying to stop Bitcoin. We've heard rumors of more bank mergers in the works if things get bad. And those would be, once again, too big to fail banks potentially buying up ones that are in trouble. But the good news is on the banking side is at least the stocks of the regional banks have rallied over the last week and a half to 10 days. And therefore, there's a thought maybe this is the respite. Now, my trader hat makes me believe it's a dead cat bounce. and that there will be, particularly if the Fed does attempt to raise rates again, even more carnage in that sector. But for now, we'll see. The reality is that the macro outlook is clouded. If the economy ends up in a soft landing, Bitcoin will do okay. If the economy crashes, obviously, as with all risk assets, it will drop before it decouples, but there will be some pain ahead. The truth is, when you look at the statistics in Bitcoin, however, and I will always point this out, the percentage of long term holders continues to be at an all time high. The other massively important statistic I talk about is my favorite chart, the hash rate versus the price. Now the hash rate is, kind of squiggling around. It's a little bit off its all-time high, but the gap between the hash rate increases and what's going on in the price is still very significant. That's one of my favorite trades. So now that's news for this week. Not a lot going on. We can have a nice weekend. But I did want to talk to you about something that I watched. I watched a fantastic interview that Robert Breedlove did with Jason Lowery, who's written a book called Software, with its software without the e, and it basically gives a extremely well thought out, documented and persuasive reason why Bitcoin could very well be the answer for data security as the world turns to more and more digital. Now, you might be thinking, what do you mean turns more and more digital? The reality is we have nation states really are kind of experimenting in cyberspace right now. Yes, our financial markets are interconnecting computers, but they're not truly digital. Most of them are analog. And in fact, as you remember last week, I told you that the single thing that people on Capitol Hill should know is that the financial markets, the capital markets of today, are analog, based on pieces of paper with some computer code kind of papering over the general core. But it's an analog system. And the US is the best system. When the markets go fully digital, the US analog system will pale in efficiency compared to the newer systems. So it's really important that we encourage that and not try to push all companies offshore as our current regulators are doing. But get back to software. The thesis is pretty simple, that the next generation of warfare is going to move into the digital domain, that packets of data are the most important value that needs to be protected. And the point, that to try to summarize this in 30 seconds is kind of difficult, but the point is that Bitcoin, being proof of work on a massive global scale, is exactly the kind of network that can be used to protect data, because you can't use software to protect against other software very well. It's prone to problems. It's sort of like using the Maginot Line, which holds in two dimensions, to stop a ground war. And then, of course, in World War II, the Germans leapfrogged over it with blitzkrieg using air power. Well, the problem with all sorts of software defenses in terms of cyberspace is that at the end of the day, only air gapping or keeping things away is tough. But proof of work is interesting because the idea of providing some ticket to be able to get at data is extremely appealing. Now, Jason does an incredible job explaining this, but the essential idea is that use of the Bitcoin network, one of the pieces of value of Bitcoin is Satoshis could be used to allow access to people's data on a pay for access method. Effectively, the analogy he uses are of these structural vines, which wrap around trees in various forests. And the vines themselves become the strength that keeps the tree upright as the vine is sapping the tree of its nutrients. It is entirely possible that that scaffolding could be Bitcoin, and that could be a big deal. He makes it a point that ownership and control and hash rate in the Bitcoin network should be a strategic defense priority for the United States. And his concern is that it is already becoming a strategic defense priority for other nations. Potentially, that's why Russia has gone from just under 5% to over 11% of global hash rate over the last couple of years. Now, I'm not going to explain it as well as Jason can. You'll hear me talking about more later, but go and do yourself a favor and watch the interview that Robert Breedlove did with Jason, or buy and read Software to get the understanding. The fact is, understanding that there are geopolitical reasons for Bitcoin that go even beyond the thesis that it is a better form of money. A better form of store of value because it is more portable, it is more verifiable, it is was equally divisible, it is more transportable and transactionable, it is also provably scarce. Those are things that a digital store of value need, and Bitcoin has it. But when you add to that use case of protecting our global data networks, it becomes extremely important to understand that there could be an explosive upside even beyond digital gold. That said, at digital gold, as we said, it would be about a 20 to 1 increase from here. So, like me, if you also look at two other statistics that came out this week, it seems that others agree. The percentage of long term holders holding on to Bitcoin is once again an all time high. And the percentage of long term holders who are depositing to exchanges is an all time low, meaning the holders aren't selling. So the sellers are speculative. And in fact, it looks like there's patient buying going on. That said, I've been saying the same thing for months now. I'll probably continue to say the same thing as we approach the summer. But for now, we'll leave it where it is. So have a great Memorial Day weekend, everybody, and we'll see you next week.